Hi, this is James Shug with the end of day report from Westpac's London office. It's Friday, June the 22nd. Look, the very sharp sell-off, actually the second worst day's trading in the US for the year. The big sell-off we saw in the US market last night, it wasn't initially replicated in European markets. It was on the basis of the Moody's downgrade of the banks, which in the end wasn't quite as harsh in terms of the number of notches most of the banks were marked down by the ratings agency. It wasn't quite as harsh as had been anticipated, and because of that we didn't see European markets sell off too sharply on the open. However, ongoing concerns about the global economy saw mining and energy stocks marked down. That hit the UK market. And we also saw in Germany a very weak IFO business climate index. It fell in June from 106.9 to 105.3, with the expectations component down very steeply for the second month running. So more evidence that German businessmen, and as we saw yesterday with the German analysts, more evidence that there's real recognition that the German economy is being impacted by the negative goings on in the rest of Europe. There wasn't much other data today. We had a very soft Canadian CPI release. There was no US data of note. The main events in Europe today were the meeting between Merkel, Hollande, Rajoy and Monti in Rome. They actually did come up with some comments afterwards and a commitment to look at spending around 100 billion euros on growth measures. This has been talked about for some time. There was also talk about a financial transactions tax, closer fiscal integration and so on. Lots of high ideals, no real progress in terms of actually meeting those aims. And as we've pointed out before, with Mario Draghi, the President of the European Central Bank, not present at the meeting, our view that there needs to be a much stronger participation in any solution to the sovereign debt crisis, much stronger participation by the ECB. Our hopes, and indeed the IMF's hopes, that the ECB will do more, certainly weren't lifted at all by Draghi's absence from that meeting. Some of the comments that followed the meeting: Merkel said that growth and employment must now become in focus. Monti said the euro is here to stay, and the one I like the most, Europe is strong and solid. A bit hard to swallow. The ECB relaxed collateral requirements for banks accessing the ECB's funding, but again, falling well short of what we really think the ECB should be doing. That's firing up their bond purchase program. So given all of that, at the close in Europe, we saw the London market down 1%, the French market down 0.75%, the DAX in Germany down 1.25%. The Spanish market actually bounced 1.5% today. The Italians were down 2/3%. And the Dow, at the time of this report, US lunchtime, up about 0.3%, but that followed yesterday's 2% slump. Commodity markets, we did see some of the metals marked down sharply. Nickel down 4+% today, silver's down about 0.5%, but gold and copper are a little changed. Oil actually up 2% at $79.70 a barrel. The Aussie dollar in the European session was trading just above 1 cent. It didn't quite dip below parity against the US dollar, although it got close to it. But with the late rally in equities, which benefited the US market in particular, that helped the Aussie dollar do a little bit better heading into the London close. It's at 1.006 at the moment. That's about it for today, and indeed the week. We'll be back on Monday.